Alrighty, mate. Jake Morrison, so good to have you on the podcast, mate. Let's start off by cracking these beers. I know we're both pretty thirsty. Cheers, mate. Well, cheers from there.
Yeah, absolutely. Oh, thanks for having me on.
No, mate, my pleasure. My pleasure. Obviously, well, the listeners wouldn't know this, but we do a little bit of business together.
Yep.
Just for a bit of background on you, I know you've got the business asset legal, where you specialise in conveyancing.
Yep.
And we'll delve a little bit more into that. But I thought, and I kind of always like to start here, but just tell me about your journey, how you got into law, where you started. Have you always been a Brizzy boy?
Grew up in Brizzy.
Nice.
With the exception of a 9-month stint living at Palm Beach, I've been in Brisbane my whole life. So hopefully one day I'll come back down here. But at the moment, it's Brisbane.
And I know you've got some exciting news to share on that shortly as well. But so where'd you go to school in Brizzy?
Churchy
Nice.
boy. Yeah.
Okay.
So
awesome.
The listeners know about the Zoomer story. I'm a Zoomer boy.
And so was it like whenever you went to Churchy and you came out of school, was it like, yep, I'm going to go straight into law and conveyancing, or what was the kind of journey
actually,
like?
when I was in high school, I had a fondness for accounting.
Yeah, right.
So I was top of the class in accounting. Loved numbers, still do. So I actually my main course that I wanted to study when I went into uni was accounting.
Yeah.
Then when I got my OP, it was good enough to do law as well as a dual degree, so do both. And my dad was a lawyer at the time, and he sort of kind of said, 4 years for a business accounting degree, or you can do an extra year and a half and have, a law degree as well. So I decided to do the dual degree, business, majoring in accounting and law. So, and funnily, my first preference was accounting, but now I'm a lawyer. Worked in accounting for a year out of uni, and pretty much worked out pretty quickly that accounting wasn't going to be my future.
Fair enough.
Yeah.
Fair enough. And when you went into law, was it like straight into conveyancing, or?
Good question. When I first graduated from, so when you complete a law degree, you have to then do what's known as a legal practice course. It takes 6 months. So it's an additional level of training, essentially. So when I completed that, I started in a firm that we were doing insurance litigation. So we're doing a lot of work with Suncorp.
Is that like doing claims and those sorts of things?
Claim recovery,
or?
yeah. So it's like subrogated insurance recovery. There's some home claim insurance. So if, they would pay out on the policy and then they'd recover it from a third party. For instance, they identified that the oven was at fault.
Yeah.
They'd go after the manufacturer or whatever it may be.
Gotcha.
So I did that for 2 years. And my boss at the time actually lost, because how big these big companies work is they have panels of solicitors.
Yep.
And he was one of 6 lawyers that was on the panel. And they changed the panels every 3 years, and he got booted.
Yeah.
So there was about 6 of us in the team, and unfortunately 3 of us got made redundant, which for me, I suppose at the time it was a bit of a dagger to the heart.
Yeah.
But a bit of a sliding door moment, because it wasn't really where my passion lay. I wasn't really passionate about insurance. I don't know. If you are, then you probably drink more beers than 1 or 2. So then I took a bit of time off because I don't know if you've ever been made redundant, but it's something that it knocks you around a bit. So I took a bit of a break, and my dad, as I mentioned earlier, was a lawyer, ran his own firm. So I've sort of eventually followed in his footsteps. He was still practicing at the time, so I remembered the day I went and pitched to him and said, I want to get back, get into the family business, not get back into it. He actually had approached me years ago to go straight into it, but I, wanted to go and try something different, make my own way, pave my own way.
Yeah.
So then I had to, sort of go and sort of beg him for a job. Wasn't a lot of work going at the time, so pretty much came on at minimum wage.
When was this?
This was 2014.
Yeah, right.
So
okay.
10 years ago.
Yep.
And he ran a suburban practice, a lot of conveyancing, leasing, a little bit of litigation, not a lot, estate work, administering deceased estates, so forth. So I got a bit of exposure to a few
everything.
different areas of law.
Interesting.
But I had to I had to justify my wage and my position there. So I kind of hit the pavement like a real estate agent would do. And door knocked real estate agents around the area. Introduced myself. Obviously, we had Dad's business at the time had been going for 40 years, so had some runs on the board, so I could sort of leverage off that success to try and grow my own referral base. It took me about 6 months to start getting some decent traction and start getting some mortgage brokers, some local real estate agents, and slowly built up my referrer base. That was Morrison's. So where Dad closed that firm probably about 6 years ago.
Was there ever any, and that was actually going to be one of my questions, so was there any ever moment there where you would potentially take on that business? Like, did he just close that completely, or did he sell it off? Or
he closed it completely after I actually left.
Okay.
I got to a point. I grew the work that I was attracting to the firm quite considerably, and family issues came into play, and I went to the boardroom and tried to bargain for a better arrangement. And there was actually some other work that I was getting approached by a few local developers to start doing some development work, and Dad just didn't want to take on the risk that was associated with doing that line of work. So I actually found myself leaving Dad's work and going back into town and working for another big firm, but this time in a property sphere. And the goal there was to work in doing developments. So I sort of had identified the firm I wanted to work for, working out who these developers were sending their work to, so that I could go and work with a lawyer that had the experience, so I could then essentially learn it and probably go full circle and come back and eventually run my own or open my own shop doing that line of work, as well as the resi conveyancing and the estate work and everything that goes with it. Unfortunately, there I had another bit of a roadblock. The lawyer that brought me on, I came in with, he had been headhunted from a firm down here at the Gold Coast. So 2 months into that new gig, I'm meant to be learning off him. He comes in, knocks on my door one day and says, "You're going to hate me. I'm leaving. I'm taking a job down the Goldie." So I kind of got left to my own devices there, and fell back into doing a lot of resi conveyancing, and not really getting that experience that I kind of went there for. To do the development work. So it was an interesting period for me. So I kind of had moved away from some of the resi referrers that I had been working with to go into the development sphere. And then I found myself doing a 360 or 180, sorry. And I stayed there for 2 years, and actually went and worked at another conveyancing firm that's a very similar firm to ours currently. Predominantly resi conveyancing, probably about 80% of their business would be resi conveyancing, similar to ours. I worked there for a few years and just sort of outgrew it. I was at that time really ramping up my referrer base with brokers, real estate agents, and at the time as well, the buyer's agency space was really growing. So I had a really good friend at the time that had started up quite a successful buyer's agency.
Hasn't that profession just took it off in the last?
It's grown.
Even particularly this year. I've just noticed they're coming out of the woodwork everywhere. And I'm not necessarily saying that's a bad thing. I actually think that's a good thing. I think that people are needing that touch from a professional when it comes to buying a property more and more.
Definitely,
Probably got to do a little bit with where the market's at, and people just want it taken out of their hands. They want a professional looking at it, but it's it's gone bonkers.
It has. I think obviously the appeal with the buyer's agent is that relationship they've got with the sales agents. They 100%. Have the access to off market stock. They can identify value when they see it, and they know the lingo. And if you for the listeners out there, if you're looking to get into property and you're struggling, I think a buyer's agent, at least having a chat with a buyer's agent, is definitely the way to go.
For sure.
Just back to what I was saying, the buyer's agency space was growing, and I kind of leveraged off that relationship with my mate at the time, who was running a very successful buyer's and still is running a very successful buyer's agency in Brisbane, and just leveraged off that relationship with other buyers agents and grew my network out that way.
Yep.
We started getting work in. This is the firm that I was at before we started Asset Legal, and there was work coming in that I didn't know about. When that started happening at the firm, and
red flag,
referrers were calling me going, "Oh, what's happening with this file?" And I had no idea that had come in, and I was working on a commission basis, so everything that. Yeah,
it's an issue.
So I worked out pretty quickly. I'm only really going to get ahead if I start my own thing.
Yeah. And transparency there as well, isn't it?
Yeah, a little bit.
Yeah.
So we did that.
So
opened the door in. Yeah. Sorry.
When did you open the doors? Asset Legal.
October 2021.
Yeah.
So I think I made the decision. I sat down with my business partner.
So you've probably just ticked over 3 years.
3 years
in business.
It's actually 3 years tomorrow.
Oh, there you go.
Yeah, to the day.
Happy anniversary.
So thank you.
Asset Legal.
Yeah, 3 years. So
I bet you've learned a lot, no doubt.
I have. Yeah, I've learned a lot about business.
Yeah.
Learn a lot about cash flow.
Yes.
I'm sure.
Because for sure. Yeah. How many staff have you got there now?
So there's 8 of us in the team. So myself, my business partner James, Natalie, who is our office manager. You've dealt with Natalie a few times. So Natalie came on pretty much a month after we had started the business. So she'll have her 3-year anniversary with us.
Oh, there you go.
Month. And then
did you already have a working relationship with her? Or?
Yeah, Natalie was working at the firm that I was at previously, so she saw that the grass was greener.
Fair enough.
Came across, and then that was leading into Christmas 2021, and we were just going that well. We pretty much could put a staff member on straight away in the new year, so we put on Rebecca, who you've dealt with again as well, and then an office junior, Lucy, pretty quickly as well to provide us a bit of admin support, since then we've added a few more. Nilu, who is solicitor, which is obviously fantastic having another solicitor, which provides the level of depth that we need. We do need another solicitor as well. At the moment, and we've also added Lauren, Katie, and now Taylor.
Jesus.
So. Lucy's been the only staff member to have left us.
Yep.
Yet, touch wood.
See you, Lucy. Sorry.
Lucy went into just a different area of law. So it was her first job in a law firm.
Yeah.
She was with us for 2 years and has moved on. But yeah,
can't keep everyone.
It's a team of 8 now, and we've just recently put up an ad for 2 more. So
and you're market Brizzy and GC now,
and the GC. Yeah. So
unreal.
We started just in Brisbane.
Yeah.
But we were getting a lot of, obviously you're based down the GC. You get clients that buy down here. There's a few other agents that we work with, some buyers agents that buy down here. So we decided that we need a place to meet clients and to base ourselves.
I was about to say that. Do you get many people these days that you're actually coming into?
Not a lot. No.
The office?
No. Yeah. I had 3 meetings this morning in the office with clients signing mortgage documents, guarantor documents.
I guess, there's still some lenders out there that require those paper, right?
So when you're dealing with trusts and everything, you need guarantors and everything. You'd still have to have those meetings face to face. But the beauty of, the back of COVID is
digitalized.
Clients are happy and more comfortable just to do their meetings on Zoom.
Yep.
It's great for our processes as well, because we've got staff that work hybrid. Some are in the office, some are at home. So, it's just really good for business to be able to offer that and, not have to cater for all of the staff in one particular office at one time.
Yeah. Oh, that'll be unreal, mate. Now, question I've got, and one thing that you just touched on was really important, or maybe not a question, but just a discussion point, is guarantors, right? Mm-hmm. So some of the banks are flexible with this in terms of, they can hold the documents for a certain amount of days and they can sign and return, but more times than not, they need to get independent legal advice as a part of going guarantor. So what does that sort of entail for you guys when you're maybe not going through the whole process, but what does that usually entail when you're sitting down with them, just explaining what the risks are ultimately? Or?
Yeah, so I suppose the typical guarantor is, your mum and dad.
Yep.
that obviously want to guarantor their kids' purchase to avoid LMI.
Yeah.
So, when you're dealing with providing that advice, you're essentially letting them, making sure that they understand that should the borrowers, being their kids, fail to repay, then they're going to be on the hook for it.
Yeah.
So generally a bank will take security over the parent's property as well for 20%. And then once they've repaid it, they'll, remove that the charge on the parent's property. So, the advice is really around what happens if things go wrong.
Yeah. And usually those discussions have already taken place, right? But
it's generally quite a loaded conversation because they know before they get there that the advice that we're going to give, it's obviously already been discussed with the broker, and the kids have obviously already had the conversation with them. Essentially, so it's more so an exercise for the bank to cover their ass, so that should for whatever reason down the track, if they go for that guarantor's property, that they can say, well, here's the certificate that you sat down with Jake Morrison on this date, and here's his certificate saying that you sat down, you understood, the advice that was given to you. So that's the process. So it's obviously going through the loan document and the guarantee and indemnity document that the bank prepares, and all banks are different. Some banks, their guarantee documents are 5 pages long, some are 30, 40. So it just depends on the lender.
Yeah, no, for sure. Now, one thing that I do really love about you guys and kind of leads into, I guess, what you've just discussed around, your journey as to where you got to. Somewhere along the line, you guys have, from my experience dealing with other conveyancers and solicitors, somewhere along the lines, you guys have come up with a process that is like very hands-on and high touch with the client, because the feedback that we get from a lot of people when they use you is like, oh, geez, these guys were amazing because, they made it really clear. I was able to talk to Jake before I actually signed the offer. So like, is there a particular point in time or something that you've obviously learned along the way that you've gone, okay, this is how we want to operate?
Look, just on the review side of things, like I think that's probably the most important time for a client is that initial engagement. A referral comes across from yourself. These clients are going to auction, or they're wanting to submit an offer. We need this contract reviewed. We actually offer, and I think a lot of clients, respect this, and it's provided a successful formula for us is we provide a complimentary review for a standard REOQ contract, and we sort of stand behind that. We'll do it within 24 hours because time's of the essence. If you take too long, then you're just losing credibility. So that's one thing that we've sort of from the start we've been pretty strong on.
And that's different. That's different from a lot of other.
Some firms will they'll charge, for an advice. So you might identify as something to do with an easement or whatever it may be that ultimately makes you decide that you don't want to proceed with the purchase, and you're up for a $300, $500 review, whatever it may be. And then you've got some other firms that will put it to the bottom of the pile in terms of priority. Might take 3 to 5 days.
It's too late by then.
And as
you know,
dealing with real estate agents, things need to happen yesterday. So I think understanding that and kind of thinking like a real estate agent thinks has been part of the successful recipe for us to get that referral base where agents and brokers know that they can send clients to us and that we're going to, especially that for that review process, get it done quite promptly.
And that's the market we're in, like in Queensland at the moment, or particularly southeast Queensland. It's like property goes onto the market. Okay, well, what I'm tending to see a lot of, it's like, all right, all offers need to be in before 5 p.m. or whatever it might be. So all of a sudden you leave it a day or two and it's like that property's gone because they've gone to the buyers, or the sellers, I should say, and they've gone, here's 5 offers. Which one do you want to pick? And if you miss that window of opportunity, you potentially then miss out on the property, right?
Definitely. It's COVID was obviously nuts. There was people signing contracts without reviews.
Oh no! So you would have started the business
just after COVID.
Yeah,
so I was at the previous firm during COVID, and I still remember because I think it was around March when COVID hit.
Yeah, 2020. Yeah.
Yeah.
Yeah. What would have been 2020?
2020.
Yeah.
That's right.
Yeah.
And my boss at the time, I remember having a conversation with him because obviously no one knew what was going on, right? So everyone, as soon as there's that uncertainty, everyone just puts their hands up and goes, well, we're not going to transact. We're not going to buy. We don't know what's going to happen. We don't know whether we're going to have a job in 3 months' time, whatever it may be. So everything just stopped.
Yeah.
And I remember him as a business owner going, shit, this is really
Yeah.
concerning. And then it just out of nowhere, because of COVID and obviously people weren't traveling.
They put their money into
what
property.
Happened? It just went the other way. Everything is the property prices just went gangbusters, and conveyancers, real estate agents obviously made a bucket load. So did brokers. Still getting your trail.
Mate, we started the business 1 October 2019.
Yeah. So before.
We just had Jude in Jan of 2020.
Yeah.
And then all this stuff started to come up. Yeah. Oh shit, here we go. This COVID thing had come up.
Yeah.
And I just said to Sim, I'm like, and we'd both just left our jobs.
Yep.
I said, Sim, fuck, here we go. I said, all we can do as a new business is we can put the message out there that if anyone needs help, irrespective of what it is and stuff that we wouldn't get paid on, but just let's see if we can just first and foremost see if we can help people out because at that time, in particularly, pilots, there's a lot of pilots losing jobs.
Yep.
There's a lot of industries that were affected. We actually had a lot of people reach out to us that we just helped simply going, because one of the things that banks did at that point in time is they said, well, you know what, we'll let you put your repayments on hold for I think it was 6 to 12 months.
Yep.
And so we actually helped a ton of people out with just going, well, just make sure you need to understand that at that point in time, the repayments were getting loaded on essentially, like capitalized.
Yep.
So they just need to understand that if they stop paying it, that they're actually going to end up with a bit of a bigger debt, and then also it's going to be increase their repayments when that time came. And then it went the opposite way. It went bloody gangbusters, and the property market just took off, which I don't think anyone expected. No. But
you'd be a rich man if you predicted what happened.
I know. I know.
But it's similar to what the ATO did, right? They obviously put freeze on collecting BAS payments and whatnot, and a lot of businesses that were given that luxury during COVID.
They also did the cash flow funding.
And they did like the
JobKeeper.
Yep. So my brother works in hospitality, and I hear from him a lot of the businesses that were afforded that luxury during COVID, and now the ATO is cracking down and collecting payments, and unfortunately for some businesses the debt just racks up and they just it's too much to recover.
And it's like property obviously did so well. Anyone that was kind of associated with property probably did pretty well, but obviously there were still definitely some areas that were affected, unfortunately.
And still are.
Yeah.
Still
100%.
feeling the effects of it years on.
Yeah. So we were talking a little bit about before, and I was going to jump in, but so just talking about like when you get someone that comes through your doors and they go, yep, cool, I'm going to sign to buy this property. They're successful. You obviously go through the review process. You look at it.
Yep.
The one key things that we get a lot of questions about from clients is, okay, searches, right? Mm-hmm. There's obviously quite a few searches that get undertaken whenever you go to buy a property, and that, I guess, forms part of the due diligence phase, or it's, the finance period or the building and passive period where people will take out these searches.
Yep.
Do you just want to explain like maybe a couple of the key standard ones that you would get for clients?
Yeah. So big ones are rate search, obviously.
And what is that? What's that?
The most important thing there it's going to identify is, is the seller or has the seller been
paying their
rates? I've seen one where we had to cut a check at settlement for $12,000. The seller hadn't been paying their rates for many years. And that's and obviously that doesn't affect the buyer, but by you doing that search, that makes sure that when that property changes hands, that debt's being cleared and obviously taken off the seller's portion. Yeah, because the rates and water charges and land tax attached to the property, not to the individual or the owner. So doing those searches, just ensures that the buyer is not, I suppose, settling and inheriting debt from the previous owner.
Yeah.
So there's the adjustment side of it. There's also, if there's any notices from council about unapproved works, outstanding plumbing applications, all those sort of things form part of the council search. You can go further with your searches. One of the questions we ask clients when they come along and we do the review is, has there been any recent, works done to the property? Has there been a deck put on, a carport, whatever it may be? That then triggers an additional search, like a building approvals and certification search.
Yep. And so you can check that they've all been ticked off by council. Yep. Everything's is as it's supposed to be, and then the risk to that is if they don't do that is,
well, they're inheriting, a problem, that they've got a structure on there that is a ticking time bomb. The council could come around and say, well, that may have been approved a few years ago, but it hasn't been certified, and whoever's done the job hasn't done it within the the approvals and the specifications, and you now need to rectify that. That's your problem.
Yeah.
So if you miss out on doing that search and that due diligence, you are just leaving yourself exposed down the track. If there has been those sort of works on the property.
And so usually when you're, and just probably speaking from my side, I've seen this before, but so usually if you identify something like that, it's essentially going back to the seller solicitors and going, hey, can we get certification or something to show that this has been approved by council?
Yeah. And that takes time to get the searches from council. So I suppose the discussion we have with the client when we do the review phase and we ask them, has there been any, improvements, i.e. the deck or the carport?
Yep.
Yes, there are.
Yeah.
Well, this is the process. We can either put the clause in there about the subject to satisfactory searches, or we can just go to the agent now and say, look, this is what we want. Can we get the docs directly from the seller? And if we can do that, and, most of the time the sellers have the documents. Or the agent does. Yeah. So, we then look at it, make sure it's fine, and we can just give the client the okay to go ahead without, having to have that special condition in there.
Yeah.
So, outside of that as well, you got your land tax, which is a big one, especially when you're buying off a seller that owns a lot of property. Their land tax bills are quite substantial.
Yeah.
I've seen some nearly as high as 50,000
Jesus.
Dealing with some developers. So, you've got to make sure you do that search and also get your head around not just a standard REIQ, but when you're dealing with off-the-plan purchases, what these developers will do is they will work in special conditions to pass on
the
their
land
tax bill to the buyer.
Yep.
So, it is very important, more so for a off-the-plan, that you do get the contract reviewed. I've had a few clients in the past that will just sign an off-the-plan contract and send it over, and we just pretty much have to say to them, put them on notice that they've signed a contract, and when you get to settlement, there may be an adjustment for land tax depending on what the land tax search reveals at the time.
And the difficulty with an off-the-plan is you're unconditional. Like those off-the-plan contracts, you're signing them, they're sight unseen. Yes, you've seen the plans. Yes, you maybe know where it's going to go, but you could be signing that 2-3 years in advance. So a lot can obviously happen in that period as well.
And it's also, from a finance perspective, it's cash on cons. So it's, you got to be pre-approved.
Yep.
And you'll be approved for that purchase subject to the valuation.
Yep.
And also subject to your circumstances not changing.
Yes.
So, you might be buying something in 3 or 4 years' time. I've had a few clients over the years, interest rates, change in circumstances, like young couple, 2 jobs, bang, all of a sudden they decide to have kids. That changes so you really have to be quite careful if you go ahead into the off-the-plan purchase sphere. Yeah,
that's an important conversation to be having, right? Like between from a mortgage broker's perspective and also from a conveyancer's perspective or a solicitor's perspective. It's just kind of like, hey, these are the risks associated. It's not saying don't go and do it, but I think it's always good to have that network, that team that you can lean on throughout the process.
Yep. Create a team around you.
100%. 100%. I think that's. And the amount of stuff that, and not from a bad sense, but the amount of stuff that the clients don't have to then get involved with that we can sort out ourselves, or you can sort it out with the buyer's agent or the real estate agent, just makes it so much more seamless.
It does.
And really, ultimately, the client doesn't really need to be involved with it either.
Yeah. They just have to sign.
Exactly. And pay it. And pay it whenever it's all done and dusted.
Our bill,
anything else? Any other searches? No, that's probably the main ones. Obviously, there's your standard, like your floods and that sort of stuff.
Floods,
but is that
sort
very
of
common?
ties in. site ties in with the council search.
Yeah, okay.
Well, it does in Brisbane City Council anyway. But you can do additional searches. Outside of that.
What about if someone was, let's say, if someone was buying a block with the intention of developing on it?
Yeah.
Well, is there anything in particular different that you might?
Contaminated land search.
Okay.
If it's in an area that, up in Brisbane around the Murray area where there used to be old abattoirs, there's a bit of contamination.
Yeah, right.
You obviously can't develop on that. Main road search, making sure there's no planned resumptions. Like if you're buying close proximity to a main road, you want to make sure that, you're not going to be, spending X amount of dollars on a new build, only to find out in a few years' time that they're going to resume part of your property for a new main road.
Yeah.
So, that's a search obviously that we do from time to time.
Gold Coast Highway, Palm Beach. Yeah. Sorry, guys.
Exactly. Spot on. They're the two main ones that we would do. And then, recommend to the client as well, if they're buying a block of land to construct that they're doing a soil test.
Yes.
That's a big one. A lot of people don't quite understand, but obviously.
And that's buying a block of land, right? Yeah, having that soil test sometimes as a condition within the contract.
Yep. Yeah. Because, once you get the results of your soil test, it could incrementally increase your excavation costs.
Yeah. And even the concrete, whether they got to put piers in there as well, like it can be 15, 20. I'm assuming sometimes even more than that, but we've seen that in the past.
We're not seeing a lot of people buying land now to develop just because of how the building industry is. But that was one that was around before COVID. But we'll probably see it come back a bit more over the next few years, I suspect, when the build costs come down a bit. Yeah.
I think that's an interesting one in itself. We could probably talk for hours about what's going to be happening with the economy and build costs and cost of living, and it's the talk of the town at the moment.
That's a discussion for another day.
Yeah, maybe. That's it. So for you from here, like, do you see yourself growing the team much more? Like, where do you see Asset Legal in the next couple of years?
Good question. I kind of, the firm I was at before, I think they're about 20. It's too big. That's too big for me.
Yeah, fair enough.
I think you get to, in my line of work or in our line of work, I think the sweet spot for us is probably going to be 12 to 14. Mm-hmm. I still want to have some element of control over the staff and being able to train and make sure that they're executing the work like I did when I first started the business, just so that we've got consistency with our referrers. I think if you grow just by numbers,
for the sake of it,
you dilute your quality of the output.
Yeah.
And then you shoot yourself in the foot in that you run the risk of burning referral relationships. Yeah. And them going elsewhere. Yeah. So we've been quite intent with our growth strategy since we started the business, in that we didn't want to bring on too many staff too quickly. And also we wanted to make sure that we were hiring the right people. Some of our competitors, they have staff come and go every 6 months. We've had one staff leave in 3 years, and it was a junior staff. So to answer your question, we're 8 now. I'd say 4 or 5 more would probably be the sweet spot. Bit of growth down the Gold Coast. Can bring on a few down here, and really target down here as a growth for us, because we've got a pretty good following up in Brizzy already.
So a lot of transactions happen on the Gold Coast, that's for sure as well. So
plenty of developments, plenty of off the plan developments down the Goldie.
Yeah, plenty of those. So like from a transactional standpoint, like how many files are you guys dealing with at any one time? Like is it?
Good question. So we just had our record month. Last month. We had 170 contracts in a month, which is pretty crazy. I still remember going back to the days when I started working for my dad and going out there and trying to, build my network. I thought 10 contracts in a month was a good result for me to be able to. So we've come a long way. Yeah. But that just comes with growing your business. Where 3 years in, we're now starting to see a lot of contracts that are coming in that are organic, as we call it. Yeah. I.e., from existing client base, they're either coming back and buying
That's
again,
gold.
or they're referring their brother, sister, mother, whatever, to us, which is really good when we get a referral from someone saying, "Hey, you did a conveyance for my parents 2 years ago, and
Yep.
they raved about you, and we'd like to engage you." So we're getting 3 or 4 of those a week.
Yeah.
Which is good.
And that's just like the proof's in the pudding there, right?
Yeah.
That you're doing the right thing and people
You
appreciate
get it with your business as well, I
Yeah.
imagine. A
Yeah,
lot
yeah.
of the organic clients coming back and buying their second property, buying their PPR, and now they're ready for an investment.
Yeah, exactly right.
It is good as a business owner to have, it's always good to get a referral from a referrer, but I think it's even sweeter to get a referral from a past client.
Yeah. And it's important to note that you guys don't just deal on the buying phase of that as well. You're also dealing with the selling side of things.
The sellers. So there's a lot of sales agents that we deal with, and then obviously we got buyers that sign contracts subject to selling their property, so we get 2 deals in one.
Yeah.
So I think last time I checked, the mix, because we deal with a lot of brokers and buyers agents, that's kind of been my focus from a networking perspective since I started the business, or actually since I started.
Because you've already kind of had that real estate as well. Yeah. Yep.
We get about 65% are buyers.
Yep. Yeah. Okay.
And 35 sellers in terms of the contracts that come through our door. So yeah, that's our mix of files.
It's an interesting point you just brought up. Actually, we'll try and wrap it up soon, but I think this is why it's important to have that bit of a team, and whether it's a solicitor you've used before or someone that you add as part of your team, whether it's buying or selling, is there's so many different things that you can do and conditions that you can put into a contract, right?
Yep.
Things like subject to the sale of your own home.
Yep.
So you're minimizing the risk. You're not having to go and get, bridging finance.
Yep.
It's not going to be as expensive to do that. There are so many little things that you can add in that might mean that you're able to get into that next property sooner. So I think, I think for anyone out there listening, try and find your team. Try and find your mortgage broker, your accountant, your conveyancing solicitor. All that's going to be integral as you start to grow a property portfolio. And final one, mate. I just thought we'd finish on a bit of a, or maybe not a funny note, but just a bit of a story note. Have you got any particular horror stories for us in your time in conveyancing?
Look, obviously it's pretty clear that you don't get reviews and you don't get advice at the right time. It's going to potentially lead to a horror story. So most of the horror stories I've got have been from clients that simply haven't got advice when they needed to get advice.
Yeah.
A classic one that we see a lot of is when you're buying into a unit townhouse, and they're not getting the correct searches done.
Yeah.
And
what would they be?
Like it's an inspection of body corporate records. So it's actually like quite a thorough deep dive into the body corporate. You're getting the most recent bylaws. You're getting a copy of the CMS, Community Management Statement, which has your bylaws. You are getting the sinking fund forecast. You're getting essentially a balance sheet of the admin fund and the sinking fund.
Yep.
So you can see what's in the sinking fund, what's actually forecast to be in the sinking fund.
Yep.
One particular client I had would have been about 6 months ago, signed a contract, cash unconditional because it was going to auction.
Yeah.
Only got quite minimal documents from the agent before they signed. Got the basic disclosure statement, which essentially says this is what the levies are going to be, but didn't do a deep dive. Didn't get a sinking fund forecast. Didn't even know how much was in the sinking fund.
Yeah.
Right.
Yeah.
I think the forecast said that the sinking fund had to have 200 grand in it, and it had like 25 or something.
So that's alarm bells right there, right?
Yeah, so they obviously had to, as we dug into it a bit deeper, and this is an unconditional deal, so we just had to essentially at that point tell the client, this is the situation for you now. Unfortunately, we can't get you out of it, but now you're aware of it.
Yeah.
The body corporate had used some of the funds from the sinking fund to do works on an urgent basis.
Yeah.
What happens there is obviously when they need more funds, they need to create a special levy.
Yeah.
So if there's a special levy after the contract date, then that's the buyer's responsibility. So obviously the seller was aware of it because they, been the owner, and they would have voted at the body corporate meeting to approve the works.
Yeah.
But this buyer came in blind, and they then now look down the barrel of sometime in the near future, the body corporate having to invoke a special levy to sort of replenish the sinking fund.
Do you think there's an issue? Do you think there's a duty of the agent to disclose that?
I do. Yeah. Yep. Yeah, I do. So the Property Law Act that's been around since 1974 has just recently been repealed, and was supposed to come in this year.
Oh, right. Yeah.
So the new disclosure regime's coming out. The QLS just released the new disclosure statement. So that's now going to flip the script. We're currently in a buyer beware. Buyer makes all their own inquiries. Now it's going back to going to a regime where seller has to disclose pretty much everything in relation to the property, which is going to put us in line with New South Wales and Victoria.
Wow.
So buyers are going to be more informed. There's not going to be any hiding. For real estate agents, it's going to create a whole new level of administrative work that sales agents and their support staff have to do in terms of collating all the relevant documents before they can even go to market.
Yeah, right.
So I can see some problems coming next year. So this all comes out 1
Gonna
August
be some
next
teething
year.
issues for sure.
Probably the main one is it's going to be interesting to see how it affects properties transacting off market.
Yeah,
right? Because typically
there still needs to be transparency there. I assume. So
so you then say, well, we want to go on this property. The seller then has to get that deal together,
get everything
together, right?
Is building and pest? Do you think building and pest is going to be a part of that, or that's going to be a separate?
That's a separate condition.
Okay, yeah.
But there will be a section in the disclosure statement which lists anything about any unapproved works or anything like that.
Gotcha. Okay.
So you have to, as a seller, disclose that, and if there's non-disclosure, i.e., it comes to pass that during the process of the conveyance, it works out that something in the disclosure statement was inaccurate, then it opens the door for the buyer just to walk out of the contract.
And that's going to be more admin for real estate, but it's going to be more admin for you guys, right, as well, like to look through and not that you're not doing, then maybe that will, but you're still going to need to do your searches, right? So it's like...
So I think, I thought about this a bit, and, because of our blend of work, 65-35, we kind of sit more on the buyer side. So I think the new regime will help us.
Yes.
Solicitors that work with sales agents more, I think they're going to feel the pinch. It's going to put a strain on the relationship between seller's agent and solicitor because
they'll want
to, and that's what's the situation down in New South Wales and Victoria is the sales agent essentially says, we've got a buyer, this is the sales advice, flicks it across to the conveyancer. The conveyancer does up the contract. The solicitor does up the contract. So I think, looking into my crystal ball, that's where we're going to be this time next year, is conveyancing firms, law firms, will be preparing up the contracts. So I think the fees from selling a property are going to be much higher.
Yeah.
But I'm sure
that would make sense.
I'm sure real estate agents won't put their commission down, even though they're not.
But the good thing about that, yes, might be a little bit more expensive, but geez, you're going to get a new level of transparency when you go and buy a property, right?
Definitely.
You're probably never going to be safer in Queensland when you go and purchase something to go, I know everything that's going on with this thing. There shouldn't be any hidden surprises once I get into it.
That's what it's all about. It's all about protecting the consumer.
Yeah.
The government's been very clear about that in bringing out these changes.
When you think of the grand scheme of things, right? Like, so let's say you went and bought a property for $1 million anyway, $2,000 to have your solicitor to go through everything, or two and a bit, whatever it works out to be. They go through and have a look at everything. Like, peace of mind to go, I've just spent $1 million and everything's all good and everything's been checked off. I think that's key, right?
Yeah, on that, it does blow my mind sometimes when I've got clients that come to us. And they query fees, ask what your fees are.
You pay for what you get, right?
They're buying a $2 million property, and we don't get the business because of $200 or whatever it may be.
But you do pay for what you get, right? We see that from our side as well.
Yeah, absolutely.
No communication. we're running around trying to chase everything, trying to find out where it's at. Is settlement booked?
Yep.
Have they booked it in yet? So I think that I think you do pay for what you get within this industry.
Absolutely.
Now, just on a funny point, actually, to finish up, I know I said we were going to do that before, but I know you like your fine dining.
I do.
So anyone that wants to check out Jake's Instagram, he's always got some nice photos of some delicious steaks and wines and all that sort of stuff.
Yeah, had one last night, actually.
There you go. So give me, I don't know, maybe you want to give me one, or maybe you've got a top three. I know you've been to a few, but give me your best dining.
Brisbane, Gold Coast, whereabouts? Brisbane?
Your pick. Give me just wherever.
Mate,
Brisbane and Gold Coast. One each.
My favourite restaurant in Brisbane is Otto.
Okay. I've been there before.
Italian. It's on the river. It used to be Stokehouse.
Oh, yeah. Okay.
They do this. It's called a champagne lobster pasta. It's about $80, but it's bloody good. So generally when we have a work lunch, I'll find myself there.
Yeah. What was it? Otto. There you go, guys.
T-O. That would be the pick. I think from an Italian perspective, steaks. I'm a pub man when it comes to steaks. The Norman Hotel.
Nice. Yeah.
I've never had a bad meal there.
Yeah. I took we had a team meeting there once. We actually went there with a lender, and my wife Sim, she's vegetarian.
Yeah.
Right.
Yeah.
And on the menu, I think they've got
it's worst. It's Brisbane's or Queensland's worst vegetarian restaurant.
Yeah. Everyone was shocked that we went there, but anyway,
they do like a steak cooking class. So that's a good thing. Maybe you could take the team. Maybe we could do a networking event there
we go.
At the Norman Hotel.
Sim did say that funnily enough, the salad that she got was bloody unreal, which is hilarious. So anyway,
they do good salads. I must say,
yeah. Okay. All right. Actually, so one more, last one.
Of course.
So let's say Jake Morrison's going to settle down. Yes. He's going to buy his dream home anywhere in the world. You can go anywhere in the world.
Yeah. Wow. Good question.
And mate, bank account is topped up, all ready to go. Where would you go? Is there a particular spot that you're like, you know what, I'd love to settle down
Australia,
there?
Anywhere in the world?
Anywhere in the world.
I love Italy.
Oh, there you go.
Yeah. Somewhere around the coast.
On the coast?
Yeah.
Yeah, nice.
I think I need to be near the water. That would be my pick overseas. If it was Australia, I love Noosa.
Yeah, right.
Yeah, I spent a lot of time in Noosa as a kid. My parents had a holiday unit up there so I was quite fortunate when I was
somewhere on the
growing
beach.
Up. Yeah, it's on the beach. Love the river, love fishing, love going and put the crab pots out, that sort of stuff. So,
nice.
Somewhere where I can do that. It's also good down here. When I was living down the coast, I was at Palm Beach and, had all those, activities down here as well.
Yeah.
Somewhere on the canals at sort of Palm Beach area or up in Noosa would be, if it was to be in Australia. But yeah, Italy would probably be the
nice.
goal. Yeah.
There you go. Keep our eyes peeled. Mate, I just want to say thanks so much for your time. Obviously, I feel like there's going to be a lot of value out there for buyers listening to this. And I know that they can get in contact with you. I think the Instagram handle's just Asset Legal, I believe.
ASSET Legal.
Yep. And then we've got Jake Morrison. And, mate, just appreciate your time and thanks for coming on.
Thanks for having me on, mate.
Awesome. Cheers, mate.
Perfect.